Hello friends, it's Charity here, and today I want to show you one of my favorite ways to make money even while you sleep, and that is dividend stocks. Yes, you can actually earn money just by owning certain stocks without constantly watching the market to buy or sell. Does this sound too good to be true? Stick around because I'll break it all down in plain English and even show you real life examples using US companies you probably already know about. This is not a get-rich-quick scheme. It is real long-term wealth building through dividend investing, and it's something anyone can start doing right now, even with small amount of money. So first, what exactly is a dividend? A dividend is a portion of a company's profit that it pays out to shareholders. Shareholders are people like you and me who own the stock. So when you own a dividend-paying stock, note that not all stocks pay dividends. But when you own a dividend-paying stock, you are not just hoping that the stock price goes up. You are actually getting paid just for holding it. Let's say you own 1,000 shares of a company that pays 50 cents per share in a quarter in dividends. That's $500 every 3 months in passive income, whether the stock goes up or down. Many companies pay dividends every quarter and some pay monthly. If this company pays quarterly dividends of 50 cents, you would get $2,000 in a year just for owning 1,000 shares of that stock. Now, if you now want to get paid more than that, let's say you want to earn $3,000 every quarter from this stock, you will need to own 6,000 shares of this stock, which is $3,000 divided by 50 cents. Let's break this down with real US dividend-paying stocks that you can research today. Our example number one is Coca-Cola. The ticker symbol is KO. Now, every stock has a ticker symbol, which is a unique combination of letters, sometimes you may see numbers, that identifies a publicly traded company on the stock exchange. For Coca-Cola, this ticker symbol is KO. Coca-Cola has been paying dividends for over 60 years. As of today, they pay about $2.04 per share annually, which is about 51 cents every 3 months. If you own 1,000 shares of Coca-Cola, you will get paid $2,040 in dividends every year. That is 1,000 times $2.04, which is $2,040 a year in dividends, which is about 510 every 3 months. If you want to make $3,000 from Coca-Cola dividends every 3 months, then you need to own about 5,882 shares, which is 3,000 divided by 51 cents. It might interest you to know that Warren Buffett's company, Berkshire Hathaway, owns over 400 million shares of Coca-Cola, and it earns more than $700 million every year in dividends just from owning that one stock. Let's look at our example number two, Apple. The ticker symbol for Apple is AAPL. Yes, Apple pays dividends too. Right now, it pays around $1.04 per share every year, or 26 cents per quarter. If you own 1,000 shares of Apple, that's $1,040 a year, or $260 every 3 months. But remember, you are also holding a growth stock, so you are getting appreciation and income as well. Our third example is Realty Income. Ticker symbol is O. Realty Income is known as the monthly dividend company. It's one of the dividend aristocrats, if you've heard of that term. But dividend aristocrats are publicly traded companies within the S&P 500 that have consistently increased their dividend payments to their shareholders for at least 25 years. Realty Income pays monthly dividends, not quarterly. The current dividend is about 26 cents every single month, with a yield of about 5.65%. If you have 1,000 shares of Realty Income, you would earn about $260 a month just by owning that stock. If you want to earn $1,000 a year from the stock, you need to own about 3,847 shares. So how exactly do you make money and increase your earnings from dividend stocks? There are two main ways. One is dividend payments. You get cash deposited into your brokerage account just by holding the dividend stocks. Number 2, dividend reinvestment. You can choose to automatically reinvest your dividends to buy more shares. It's called a DRIP. DRIP stands for Dividend Reinvestment Plan, which grows your money faster over time. This is how you build wealth silently. Your money is working for you. If you are wondering how to get started, here is a simple beginner plan. 1. Open a brokerage account. You can choose platforms like Fidelity, Charles Schwab, Robinhood, or E-Trade. Then search for stable dividend-paying companies. You need to look for consistent history of payments. You're also going to look for reasonable dividend yield. Between 2% and 6% is typical. You should also look for strong business fundamentals. You should start small. Even $100 to $1,000 a month can add up over time. Then use a DRIP. Reinvest your dividends automatically to compound and help you build wealth faster. You should also know about the risk associated with dividend stocks. Let's be real here, not every dividend stock is safe. If a company's profit drops, it can cut or cancel dividends. Also, some high-yield stocks are high risk, like some in the oil or telecom industries. You should always research a company's payout ratio. This shows how much of its profits are paid out as dividends. A lower payout ratio is generally more sustainable because if a company is using most of its profits for dividends, that's usually a red flag because it's not using its earnings to build a strong capital base that can support future growth. A good payout ratio usually falls between 40% and 60%. A payout ratio below 40% indicates that the company is not returning enough to the shareholders, while a ratio above 60% could suggest that the company might struggle to maintain those dividends during challenges or economic downturns. Remember, consistency is better than a high yield that crashes. If you need additional help getting started and choosing your investments, schedule a time on my calendar to get started. The link will be in the description. Dividend investing isn't about overnight riches. It's about building a steady, reliable income that frees you over time. Think about it like planting a money tree. At first, it's small, but every dividend payment is like watering that tree. And in a few years, you are sitting in the shade, financially secure. Let me know in the comments, what is your favorite dividend stock, or which one are you thinking about buying? If this video helped you to understand dividend stocks and you want to learn more about investing in the stock market, watch the next videos on how to invest and win in the stock market. Thanks for being here, and I'll see you on the next one.